The economy is in deep trouble. First, I'm an investor, not an advisor. My opinions are my own, and I want to make an affiliate disclosure. Financial Freedom, this channel, is a professional review YouTube channel. I may receive compensation from the companies whose products I review and recommend. But Financial Freedom is independently owned by me, and the opinions expressed here are mine alone. Although I do my best to be objective, my recommendations may not be neutral or independent. So be sure to investigate, ask questions, and seek professional advice on any investment decision you are contemplating. In a moment, I'm going to show you a very recent stock chart that should scare the crap out of you if you are invested heavily in the stock market. But first, the predictable resurgence of COVID has devastated the economy. Worse, about 40% of adults in the United States have at least one underlying condition that would put them at risk for severe complications of COVID-19. Now let's look at what happened to the economy in July. Restaurant reservations on OpenTable have weakened in recent weeks. And that AstraZeneca-Oxford vaccine trial? Better read the fine print. The vaccine hasn't killed anyone, so the report is that it's so far safe. But the reported side effects are anything but mild. So don't count on a vaccine anytime soon. And even if one emerges, the supply chain logistics for developing billions of ampules are minuscule compared to the need. Now, the economy is reeling from these hard facts. During March and April, restaurant reservations were down by nearly 100% from a year ago. That figure rebounded to only 50% in mid-June, but has since rolled over and stood at minus 65% as of July 21st. In April, U.S. retail traffic declined by a staggering 98%. Traffic slowly improved in May and June, with June traffic down 57%, but U.S. traffic fell 47% from a year ago during the second week of July. And as a result of this, here are all the retail bankruptcies in 2020. And there are some big names in there. Here are some household name bankruptcies: Gold's Gym, Hertz, PQ New York, GNC, Chuck E. Cheese, Ann Taylor, and Lane Bryant. Those are the companies held by Asana, which filed bankruptcy, and New York and Company, a restaurant chain. As of Sunday, July 20th, 2020, 24.5% of small businesses in the United States were closed. Over a quarter of the small businesses in the United States were out of business. Credit card purchases were only down 2% during the first 2 weeks of July year to year, which means people are spending what money they have at home. But another 1.4 million Americans filed for first-time unemployment benefits in the second week of July. Worse, the $600 unemployment boost disappears next week. The Republicans can't agree amongst themselves and are far apart from the congressional Democrats, so the likelihood of a congressional stimulus relief package is highly unlikely. The truth is that the path of the economic recovery cannot be disentangled from the path of the virus. Vaccine hopes, on top of unprecedented easy money from the Federal Reserve, have helped catapult the stock market. But 73% of healthcare industry leaders estimate that a vaccine won't be widely available until at least the second half of 2021. I said I'd show you a chart that should scare the crap out of you. Take a look at this. This is the NASDAQ as of mid-July, and it shows a classic Kindleberger-Minsky bubble. It's the NASDAQ making its final moves by going vertical. The attempts by the government to pump up the economy with new money is resulting in the NASDAQ going straight into equities and straight into the tip of the equity spear. This is a complete malfunction of the quantitative easing mechanism that supports asset prices and supposedly slowly trickles the benefits of the support down the pyramid of wealth. But the game is up, because the new money is going straight into this bubble of financial assets that are spiraling out of control. And there's even now talk of the Fed engaging in stock purchases. Coupled with corporate bond purchases, this is absolutely insane. 3 bad things to worry about because of all of this. First, Bad thing number one, a complete market crash that will make the 1929 crash look like kindergarten. Bad thing number two, inflation roars back. With this crazy quantitative easing, there's an enormous amount of money in the system, and all that can do is push prices up. Bad thing number three, if inflation comes back, interest rates are going to have to rise. And guess what? If interest rates rise to 4%, which is still quite low, all of that corporate debt used for stock buybacks and hence an out-of-control stock market defaults. So we end up with a stock market crash, rising inflation, and overwhelming defaults on corporate debt. And remember, the economy is dead, so there is no cash flow to service the debt. This is bad. Very bad. I would have never considered gold a year ago, but today, cash and gold are the only investments that make sense to me with what I see going on out there. If this was useful and informative, click on the link below to sign up for my free 10-part training on how to invest in gold and get your free gold investor kit from Regal Assets. Be sure to click on the link below